Hey, what's going on, guys? Eric here from MarketGod Trading. Appreciate you watching today. Hey, quick thing. I wanted to go over something really cool I found out. I'm excited to share it with you guys. In efforts to work on the backtest for MarketGod X, which I've been working on for quite some time, I've been playing a lot with a theory, and this isn't a part of MarketGod right now, but it's something pretty cool. I've been really focusing on more like fundamental skill when it comes to coding in PineScript. So it's enabled me to do some more advanced things than I had done before. And there's some great resources I can link you guys to that have helped me. But I wanted to share this with you, and I will go ahead and post this script from my King Thies trading view account. It is called Time Sync. I'm going to do a little bit more to it before I publish it. And I'll leave the source code because it's right here, obviously. But yeah, I just wanted to walk through it with you guys and kind of show you what's going on with this theory overall. So let me start. Let's start on Twitter. See if I'm logged in on Safari. There we are. So I'll go ahead and basically summarize what has been going on. This is my Twitter. And just to kind of give you context where the script came from, kind of what it aims to do and whatnot. So basically, I want to say over the winter, so maybe probably in December, January, I noticed there's some cool things about, I was reading a lot. There's a book called, The Man That Solved the Markets that came out, and I can share you guys that one too. But basically, it got me thinking a lot about quantum trading and just stats-based trading. And ultimately, while I don't, practice either of those, nor am I very good at statistics, it was fascinating what I found. And it kind of opened the door for looking at some more time-based algorithms and time-based various variables in my scripts. So hoping that I can incorporate that in a future version of MarketGod. But for the sake of this, the reason I bring it up, so basically, I noticed that if you look, and we're going to the script, the original thread. So basically, I noticed on the calendar year, it seemed like there were months that started with, the months that started on a Monday that had the first of the month on a Monday and then therefore the last day of the month, usually on that Monday or the 31st or wherever. Or they ended on the Monday. Basically, there was more volatility. And it would either lead up to a high or a low for the given stock price at that time. So, I've been doing a lot on Bitcoin, and I started researching into it. And the reason it happens is because it's a time frame overlap. And what that means is that the weekly, the 1 month, the 2 week, the 3 day, I've been playing with the 3 week, and the daily all end at once. And therefore there's more volume at that time of close because there are traders that only trade the given time frame. So what you see is volatility, all at once. And a lot of retail traders don't think of it as significant. So, if a monthly candle closes at a certain price, and then that also happens to be the 2 week close and the 1 week close. Now that's one reference point that all traders are going to have, all those time frames are going to have in common. That's going to anchor price at that point in time. Now, how do we track that? And I'll get to that in just a second. But I also want to show you guys real quick. So it got a little weird, and honestly, it was a little rabbit hole for me. Probably spent too much time on it in January looking this over, and then I finally kind of gathered my thoughts about it after putting it on the side for a bit. And basically, so if you look at this, what it's showing you is in 2017, we had things like this happen where January started on Sunday, ended on Tuesday or whatever. But basically, first day of the month was the new day of new period, or the last day of the former period. So going into the month, it started. I noticed that this was consistent in May, same kind of concept. October, December, 2018, same months. And now what you may notice is that these months I'm highlighting happen to be the highest volatility, or the most volatile of the 2017 bull run, which I highlighted in blue here because December, not only was the year ended on a Sunday, going into a Monday, but also, the month, the year, it all, December was weird. Doesn't happen. Notice in 2018, same thing. 2019, very similar. Started in April to July, I believe was the spike. So Q2. And then September and December. These are all the months that people have come to realize, maybe like alt seasons, crypto seasons, Bitcoin and crypto happens to be a lot more volatile. I think this is going to apply across equities and normal markets as well, but for the most part, I see it, at least mainly, I'm looking only at Bitcoin for it. And then also in 2020, March, and this is what I tweeted yesterday. I didn't tweet this yesterday. I tweeted this at the beginning of February, I think, or on the 1st of March. And basically it was that something big was going to happen that month. Because look, obviously it starts on a Sunday going to a Monday, and therefore one of the more volatile months. And so, yeah, as you guys know, market dumped in March, which kind of justified more. So I started looking at it and I wanted to figure out exactly when has it happened to the degree I'm looking at. So, I'm going to jump right over here. And this is the script I made. Basically, I took this new bar from the TradingView tutorials on TimeScript. It was a good reference point to start and just kind of, build off of that. And the result was pretty impressive, to say the least. And I'll walk you through what each one is. So if you're looking at this, and, like I said, it's not perfect yet. I'm still kind of looking at it. For every blue line right now, what you're seeing is basically the high time frame, which I classify as the daily, the 3-day, the 1 week, the 2 week, and the monthly all coincide at once. And when they all finish and open a new period, this is exactly when that happens. So you're talking about a period in 2013, I'm talking about a period in 2014, 2016, 2017, going into 2018, and 2019, where we started our uptrend. If you notice, these happen to look incredibly close to the trend, basically the trends that we know with Bitcoin. And it's almost creepy how like in sync it is. So the next filter I put on here is, okay, what about like the event I believe happened on March 31st this year, when it was the end of quarter going into on a Monday, I think, if I look at it correctly. But basically, when I put it on, it also happens to be that way. So this parameter means every new every purple bar that you're seeing, it happens to be a new quarter, which is also the beginning of a 2 week, 1 week, 3-day, and 1 month trend, also the daily and all below that, in which the overall, basically, it was all in sync on a Monday, which was the first of the month. So what you're seeing here is the holistic kind of view of these trend lines and these local highs and lows kind of forming. And there's a reason to it, I think. And I'll tell you guys here, and feel free to let me know if I'm right or wrong, as YouTube and Twitter always do. So, if I take the close price of each of these lines, so let's just go ahead and do this real quick. Might take a second, but let's see, 12.57. That's a little higher. So 12.39. I'm not going to get exact. I'm going to get it within the same cents or $10 once we get up to the higher ones. 151. Close at 185. 188 is fine. Boom. Here closes at 468. I'm going to put a line here. Oh, it's 469. There you go. Notice right here, this is how close this is to the previous halving. And same with the halving in 2012 was also very close to this. So it's weird. So then this level of support and resistance is, 576. So we're going to get down to that. And these rays, you're going to start to notice, are creating a lot of those supports and resistances that we have. And it'll be even weirder when I show you the close line on this chart and a few others, like on the time frames. That was not double check. 17,000. The close is 14,000. Well, I caught that. 14.99. Sure. I'm off of it. Let's go there. Oh, look, it's a high from 2020 or 2019. And then the next one, we go here, and that's the support we've been riding on. If I go to 6456, a little higher. That works for me here. And then again, you want the close price, which I believe 12,300. Weird. So here, and this is just on the daily frame. I'm sure I could do this again for each of the other frames. In theory, they should be the same levels, however. So if you notice, we're building the supports and resistances of this. Now let's go ahead and build in the halvings. Previous halvings. And the point of this, guys, so if I saw a quote once and it made a lot of sense, not a quote, I saw a comment on Discord. It was basically, if you're using the price scale but not the time scale to mark events, you are only using half your chart and half the time provided to you, or the resources provided to you. So why not use time? And I didn't know what it meant. Like, obviously there's time and it's just constant, and this is where the rabbit hole starts. But how do I mark significant events, and how do I make things happen? So, or how do I know when something is going on that I need to know? Or is more significant time. So for Bitcoin, I imagine it's going to be the halvings, because that is a volume generating event. So feel free to let me know if you disagree. I'm sure some people will. So in 2016, July 10th, I believe, or 12th was the halving. And we're actually going to change the color of that guy so we know it's the halving. I can't see the other one. Change it to white. We're going to make it a little thicker, and we're going to make it solid. Yeah, we don't need it thicker. We like that. Okay. And then the other halving is 2016. 11/28, I think. November 28th. Let's find out. There's November 29th. We're going to turn you up. I'm going to make you solid and make you skinny. Cool. So in theory, the next one, this is touching another subject I've been looking into. If I touch the two lines right here, then we are in a logarithmic chart. And I go like that. And then I put it on the bottom here. No, I'm not going to do it. We're just going to connect them normally. But if I put a ray, basically, with the curved line, because we're in the logarithmic chart, which is what we want to do, we go like that, and then put the back here. Basically, you get some confluence right there, or you get a trend line going that I'll show you in a second. All these other support lines, you can do flat because it's support and logarithmic. It doesn't matter, but if you're doing point to point, then the logarithmic scaling should probably have a curved line. Now, if I go and I draw the halving coming up in May, I think May 11th or 12th is when it should be. Just put it right there. Now, I don't know the price point. So this point, this dot, actually, let's delete that one. And let's just put a vertical line, because the price point, in theory, I don't know. And I don't want it to lean a bias. Let's just say the date is right here and see where we're going to go. If I switch to a linear chart, does it do anything? No, it doesn't do much. Now, that said, we do want to see there is one more factor in this that I want to show you guys. And now that we've got the halvings in there, two of the three halvings at least. Now there's a third. Let's see what the third filter is. Now this is weird. So we did the higher time frame showing what it looks like with just, independent of business events like quarters. So basically what it looks like with just the high time frames, depending on 3-day, 1 week, 2 week, and 1 month close when they all align. Well, also let's do it for when it's New Year's. And what this is when it's a new year, which it marks it here. I'm going to verify this in a second, but when it's a new year or a new quarter is what I did. And a new year, a new quarter, and a new year and a new quarter, and the business, and the high time frames are all in alignment. So everything's brand new, and it's, basically January 3rd, August, March, April, So what this is showing you is that it was a new quarter and all the time frames were in sync and resetting and what the levels were then. And if you've noticed, this line, that line, and I believe this line have been present on every time frame imaginable, which is significant, I believe. They happen to be the peak of 2017, the beginning of 2019, and a few other things along the way. Does it mean anything? I don't know. Is it coincidence? It's probably too close to be a coincidence to actually not be relevant. So if I draw that point right here, and I draw it to here, the closing point there, I believe I can do it. Move this guy over. It's going to be, this is where the trend lines start to come in. So it's going to show you it's just some weird stuff, that all sticks together. Basically showing that all time frames are in sync, and whatnot. Now, part of the rabbit hole I got into was talking about whether or not, basically calendars over time have been reported differently, but at the core, they're measuring the events that have been adjusted and counting for solar time. And this is where it got weird as I started looking at the solar time and time as a whole. In the actual events, that is some more, I'll say Kazanomics kind of stuff. It's not trippy enough or anything to be using professionally. But, the quarters and the business reasons and the overall fundamentals of the logic behind it makes sense on why that is. So what I'll do is, basically it's marking the trends, and I think that is pretty cool itself. I'll post this just like I said I would. If you have any questions, put them in the comments. I did it for the low frames. I haven't really done much here yet. Basically, going to the low frames, this may not be even programmed right. But basically every time you want time frames that don't line up normally. So like the hourly and the 2 hourly are kind of irrelevant because they line up with all the higher ones, essentially, that are significant. So I did the 4 hour, the 6 hour, the 8 hour, and the 10 hour. And when they all overlap at once to start a new period. I think I coded it or programmed it all right. But it's also every day at 5 o'clock, it looks like. So you need to adjust that. Basically, it'll show you it's relevant to your time frame of your time zone when you add this, you make it, when you add this to your chart. And so, it doesn't matter if this is the open or close in China. If you live in Brazil, it's going to show you what it was to you. I can adjust that too if I need to. And then once you get to the daily, it's going to show you everything else. I just think it's incredible. Now, these lengths of time isn't linear by any means. So there's 365.25 days in a year, not 365, which means there's also, basically we round the days, and that means we also round the hours. We round everything to fit what we want it to be. So when we see things that are linear in it, then it's interesting because then you see things that are occurring when we set up a system to measure it differently, And so the lengths of periods of time tend to be similar. I think I did an analysis in 2018 about the economic cycle. And it's kind of weird that bringing it up, but it was something it had a very similar breakdown of this. This is just a more factual understanding of what's actually going on. Just want to share it with you. like and subscribe to the video below. If you guys like this stuff, I keep posting it. Also, I got more tutorials and whatnot. I think I'm going to keep posting here on MarketGod Trading. If you haven't heard of MarketGod or used MarketGod yet, I highly recommend it. I'm going to be incorporating all of these into MarketGod itself, most specifically MarketGod X and